What's up, guys? It is November 1st, Tuesday. Usually we shoot these on Mondays, but I was waiting for the monthly data for October to come out. So let's get right into it.
I'm Jamie Tajera, co-owner of Property Bear here in Jacksonville, Florida. This is Carrie Hustis, co-owner and sales leader. While Carrie runs all things sales, my day-to-day hunting investments and developments keeps me in two main places. In the field, checking out potential opportunities in construction, or on the computer, researching hyperlocal data. So if you're looking for insight on Jacksonville real estate, you've come to the right place. Thanks for checking out our channel, and if you like it, please be sure to subscribe.
Okay, so a few things, for this month and for last month. Some of you have asked for us to shoot these based on different areas. Happy to do it. If you're watching this one is for Duval, Clay, and St. Johns County. I'm going to do some specific ones and upload those, and I'll just name those the area and then the market report. But it'll show up, and if you subscribe to our YouTube channel or our podcast, you'll see it come up as soon as it gets uploaded. So, as far as what's going on, like this week from a big market standpoint, we've got not a lot of stuff coming up. I mean, I know the FOMC announcement talk, whatever, is Wednesday, so that's tomorrow. With a press conference, everybody's expecting 75 basis points, which, in the short-term future is going to raise interest rates. And then Thursday, you've got initial jobless claims. The housing data that came out last week or the week before was pretty bad. It was pretty alarming. So, in our opinion, the Fed's trying to attack inflation, and the, collateral damage is housing. The problem for them, and part of the solution, is that they do want that unemployment rate to get up to that 5% level. The problem is that real estate is like 15 to 20% of the U.S. economy. So when you slow everything down, you might get more than you bargained for. So on the flip side of that, if you are in the market, investing in the stock market or whatever, what comes with a more dovish approach is the market tends to run. You also have midterms coming up. So markets run, you also have the Santa Claus rally, markets run. There's some of that stuff going on with the stock market, and that affects the real estate market because a lot of kind of the customers that we work with that have money in the markets are being told by their financial advisors, hey, maybe wait till December to where those funds are a little bit higher. We would rather not sell it right now. And most of the reason they're advising that is because they're all looking at what's called the Santa Claus rally, right? So markets go up at the end of the year. Versus selling, if that portfolio is worth 100 today, it might be worth, 105, 110 in December. And then you want to place it into real estate. That's what they're looking at. So let's see, Thursday, more jobless claims. So there's a bunch of other stuff. You guys can go to the Market Watch calendar and check this out. Unemployment rate is Friday. So that'll kind of tell us where we're going to go next from a rate hike standpoint. If they do 50 tomorrow instead of 75, everything's going to go crazy. And the thing is that in real estate, everything lags. So the second they make the announcement, you can watch the S&P 500 either go up or down. There's just one massive candle. But in real estate, it takes a little bit of time. Remember, what do customers, what does the retail investor, even in real estate, like to do? They like to buy when the market's super high and sell when it's super low. It's like the opposite of Warren Buffett. So if you're trying to be the 90%, keep following that train. If you're trying to be the 10% that does things a little bit differently, make sure you're looking at the financial information. Right now, you have a lot of options to buy, and I would say that home prices are going down, but based on what I'm going to show you, I kind of got surprised. So, all right, so we do not have the system right now that gives us the averages, so we're going to have to work off the medians. But let's look at sales price for for Clay, Duval, St. Johns County. From the July high, right? at 375. It came down to 350, and that was a little bit more than a 5% drop. We were estimating that we were going to hit a 10% drop by the end of the year. And let's see. And so now we're back up to 359. So we're less than, that 5% number from that high standpoint. And so when you're looking at it year over year, it's still up 15%. So why did this happen? And again, this is the median. We don't have for some reason, the system that we like to use for the monthly averages isn't working. But why is this happening? Generally, towards the end of the year, there's less inventory. And so people still get job transfers. People still need to move until those prices come up. What's something else that could trigger price increases? If you can get some of these customers back into the market, the prices are going to go back up. No matter what's going on with interest rates, we still have a housing shortage. And it's not going to go away. If you've driven through Jacksonville, you've seen the, thousands of apartment units that are just going up. I've never seen more cranes up before, ever. And the crazy part is one of the developers we work with plays both sides of the table, because they've got single family development for sale, and then they also have apartment complexes. So what happened when all of those customers could not, basically got wiped out of the market because of interest rates? Now they become renters, and they're winning on the multifamily and rental side, which is cool for them. On the sales side, or if you're a buyer, it's hard for you. It really sucks. So let's check out closed sales. So right now, from a median standpoint, we're at 359, which is up from 350 up to 359. So what is that? 2.7%. All right. Closed sales. So you can see that the trend on closed sales is down, and then we kind of have this it curved up by 50, right, from last month to this month. My concern with this number here is that this does look cyclical, right, which I like. I like seeing the seasonality. But if you notice, all of these are in January, right, except for that one. That one's in May. All of these lows are in January's. Or January lows. So let's assume we're looking at, December, November, December. Let's cut out the last 2 years and look at 17. So you've got this January low, and then December, you've got a high, and November, you're sitting around here. So around 1,900 homes for November, 2,000 November. So while this looks like a cyclical low, it may not be. And so what are we at? About 1,800 in October, right? So it's possible that we hit that 2,000 number and for closed sales, and we're kind of in line. So as much doom and gloom as some people want to put out there, the same number of homes, same unit numbers are selling, which is crazy. So percentage of list price received. I started at a time when it was 90%. So anything over 90% still blows my mind. But right now we're sitting at 97%. If you're selling a property, just know it's going to take a lot longer to sell because customers don't exist, or they have more options. Just saying this in general, buying a house is a luxury at this point. It is not something that everyone can do, and not that everyone could do it before, but now it's gotten even that much harder. Let's look at the days on market. So again, your days on market, you're looking at a median number of 38. In the last, what is this, 5 years? Our worst was 52. Again, I think these are different circumstances though, because even in 2019, 50 days, 60 days to sell a house is not abnormal. That's a very normal market. Most of the agents that got in the business in the last 2 to 3 years are in for a shock because they don't know how to market a house for 60 days. It just is what it is. We see it especially on the flipping side, but that's just part of the game. So we're not at these highs of 2019. And what was that, January? right? So we're still at 38. I do think we make it up to, around these 49, 50 numbers from a 3 county standpoint. Here's another number to take a look at. And I think this is affected by something else. This is a number we haven't really looked at before, but look at your sold dollar volume as a whole. You can see that it's still hitting like higher lows, as the market progresses, which is kind of crazy. Yes, you can see the cycles, but those cycles are still moving up in a pattern. And from what we know right now, the hedge funds have slowed down their acquisitions. All of them have told us, hey, call us back in January because we're going to start ramping it up. So if you're an individual investor trying to get into the market, and I've already told some of you that have called us, wait till December. That might be that might be why. And I'll show you the cash sales at the end. Okay, so active inventory. So here's the active inventory. We're up to 6,000, which is more in line with 2019. What is that, November, right, of this year? Let's see if I can find November. So it's about there. Again, right now we're at a kind of a crossroads. It depends what happens with interest rates tomorrow, and then in the next 60 days. This is either going to keep going up. Well, I can't say that because, again, the inventory that's out there, I would call it second tier inventory. The inventory that is the most desirable outside of new construction has basically been gobbled up and locked up with a 3.5% rate. Those people aren't selling. I know that because I'm in that boat. They have no reason to sell. Even if they bought at the peak, what we were looking at in June and July, and they got a 3 or 4% rate, their cost of living from a housing expense standpoint, it's still lower than somebody buying $100,000 less of a house right now. So active inventory, it is up pretty high. And I think that this is a pricing issue. I think once pricing regulates and comes down lower, and again, we're still estimating that 10% by December, which the numbers are going against us, honestly, right now. Then you would see, this active inventory start to come down. Think about this. Think about rates coming down, even by 2%, right? Let's say we're at 7, they come down to 5. Prices come down to that 5-10% range. We've got the frenzy all over again that we just had 8 months ago. All right, so let's go to month supply of inventory. You guys know I don't like this number, especially right now, because it's a lagging indicator, but let's just see what it says. All right, so the month supply of inventory is at 3.3. Again, it's a lagging indicator. It's fun to look at. Year over year, it's up over 200 and whatever percent. If you kind of want to look at month supply of inventory to compare it to something, based on where we're at, look at, I guess at the same point, 3.3, 3.5. So January 2018, this was also a January, right? More end of the year, very beginning of the year, right? So if we were to hit that 3.9 number, we would probably still be there. Consider this, in 5 years, technically, we haven't been in a buyer's market, right? I don't buy into that because I think a buyer's market depends on how the number of buyers available in the market. And I know this is an absorption rate and all of that, but it's also 12 months rolling of pending sales, and I'll show you pending sales next. The number of available homeowners has not gone up because incomes haven't gone up in our area, right? They've gone up other places. And so the amount of homes, if we're feeling a squeeze from a income economy standpoint in Jacksonville or a housing standpoint in Jacksonville, imagine what it's like in other markets that have state taxes and other stuff going on. That's why Jacksonville is so appealing for outside investors, because there's not that pressure and there's a lack of inventory. speaking of lack of inventory, this is something we never really bring up. If you're looking to buy a home and you have an opportunity to buy in Jacksonville on the water, in kind of the major areas over something else, I highly encourage you to do that. It's not financial advice or anything like that. But when you're talking about a shortage of inventory, if you look at the amount of homes that are on the water in Jacksonville and the available land, it is getting tighter and tighter and tighter. And a lot of people looking for waterfront in certain price points are starting to head towards Palatka, and further south where they can find it. So what's our next one? Pending sales. This is probably the most, I guess, up-to-date pulse check on where the market is, right? How many people have actually gone under contract? So October, we're at 1715. Find me another October. And we're at 2739. So this is showing year over year we're down about 40%. This is a big deal. Because even end of the year, most of these are what? Decembers or Januaries? Yeah, these valleys. Oh, there's an April. There's a December. Most of them are end of the year, right? We're not even there yet. So this is where this October is for 2020, and this is where it is right now. Again, is it consumer sentiment that home prices are going down? No. What's crazy is when you talk to the real estate agent community, they don't believe home prices are coming down. They've come down 5% or less than 5% now, but year over year, they're still up, right? So it depends on how you ask the question for them to find that out. But this is based on the available buyers, right? Fed policy has made it in such a way that the buyers, it's not that the demand isn't there, the ability isn't there, which is crazy. So let's look at new listings. All right, so new listings, we have basically hit an all-time high of new listings. And you can see that when I showed you active inventory, right, it was also at an all-time high. Now, the number of homes being listed has not changed, right? I mean, you can see that there's a clear pattern up. If I were to draw this on a chart, you can see that it is going up. But even during the frenzy, that number didn't come down or anything. So what that's telling you is that the amount of people, again, and I know I'm saying the same thing over and over again, but the available buyers to create the absorption isn't there. Again, the housing data for last week or the week before was bad enough to where you think the Fed might pivot, because it's not that housing is in a place where it's unaffordable because of price gouging or like what's going on with like oil and all that stuff. It's unattainable now because of the Fed policy, and the entire purpose of Fed policy and to get inflation down is to make it, because inflation benefits asset holders, right? You hold a bunch of properties, you're not getting hurt by inflation. You're making more money. Inflation hurts, the people at the very bottom of the economic ladder, right? So who are those people, in the housing market, right? They're entry-level buyers. They're young people trying to get in. Or they're at the bottom of the income ladder trying to get into the real estate market. But now Fed policy has made that impossible. So who can buy those houses now? The cash buyers. And so now what are you doing? You're soaking up more of the inventory away from those entry-level buyers. If anybody has Jerome Powell's ear, let him know. He's hurting the people he's trying to help. And then let's look at the percentage of cash sales, which we just talked about. You're still over 0.25%, which is crazy. Did the number come down? Yes, because you were at a third. That's crazy for any market. Any market over 10% is crazy. And we're talking about, a declining market, right? And we are still over 25% of the homes being sold cash. I don't expect that number to come down because interest rates are so high. I mean, you're better off putting your money in a treasury bond and then buying a house cash, right? But if that cash is available, they're going to use it on housing. I mean, these numbers are crazy. I mean, even right now, we're looking at what inventory at being at all-time highs in the past 4 or 5 years, right? Or approaching it. You've still got cash sales at all-time highs still, which is crazy. And keep in mind that this number still takes into account rising inventory. So if we didn't have as much inventory, right, this number would still be high. This is not a function of, oh, there's less cash buyers. This is a function of, oh, there's more inventory available. That's what this number is, which is crazy. So just keep that in mind. Let's look at distressed. I know the crash. I don't even want to look at home affordability. I already know it's like zero. But at some point, what happens? What happens during recessions, right? What the housing market wants is actually an economic recession, because it means recessions, obviously, we've already talked about this, doesn't mean that home prices come down. But what it can mean, and what it usually means, is quantitative easing by the Fed, which means lower interest rates. And then we start the cycle all over again, right? Which might be their plan. It might actually be their plan. So if you can lock up inventory today, knowing that prices are going to take a dip, and then you kind of wait and see what happens next, hopefully recession, because you get lower interest rates. Now you get to refinance, right, at a lower rate. Because think about it. What does 90% of the population do? They buy high and sell low. That's what they do, right? So during a recession was the time where everybody started accumulating properties. Oh, no, they didn't. Only a few people did. And then they rode that wave all the way up. And I'm not saying we're at the bottom, but think about bottoms not necessarily being price bottoms, but interest rate bottoms, right? So interest rates are super high right now, right? And they're not that high, but they're like high relatively to the past 12 months. That's like the bottom of desirability for this asset type, right? From a leverage standpoint. So now you don't have that much competition. In 2009, 10, there was no competition for housing. Ask somebody down the street, is real estate a good investment? No. How are they doing now? Probably not very well. They're probably doing fine. But the percentage of distressed listings is down. It's, again, we've talked about this. Everybody thinks of, at least at my age in our 30s, you think of recession being caused by housing. That's not always how it works. You look back at like the last 10, it doesn't work that way. And we have less and less distress now. So, I mean, I remember back in the day, I mean, I'm not even talking about 2017, which that's 7%, right? I'm talking about 2009, 10, when this number was 70%, right? They're all foreclosures or all whatever. REO agents had all the inventory. REO agents have zero inventory at this point. And the auctions used to have 10 a day. Now they have like 3 or 4 a day, and half of them cancel. So I hope that was helpful. If you are interested in our upcoming projects, check out our website. In the next few weeks, we're going to have those coming out. We have Johnson Commons beginning of next year. That's the super cool townhomes downtown Jacksonville. There is no fee simple real estate downtown Jacksonville, new projects available, right? This is the only one. It is super cool. There's a lot of insiders that have already reserved units, and we haven't even released floor plans yet. So that's awesome. We also have a development. I would say it's an entry-level development in 32254 northwest side of Jacksonville. I want to say it's about 80 to 95 homes, 250s to 300s, perfect build to rent model. Again, if you're a buyer, we'll put out videos on how you can kind of hack these interest rates and still get into some property. I'll do a separate one on that. If you're a seller, again, when you talk to us, we're probably going to talk you out of selling. If you've got a low interest rate, there's some other options for you there. Unless you have to sell. If you have to sell, let's work on that and go from there. But thanks for checking it out. Please subscribe, like the channel, whatever. Helps us out, helps other people find it that want to know about this Jacksonville market. But thanks again.